Over the past week, U.S. markets are in full meltdown. The dollar is slipping, bond yields have spiked, and America's allies are chilling while China moves quietly and heavily. China just offloaded over $1 trillion in U.S. assets. This isn't a blip. It's a seismic shift that could rewrite the global financial order. Subscribe now, because what you're about to hear isn't just news, it's the future of your paycheck. U.S. debt bubble in freefall. America's borrowing costs are exploding. The 30-year Treasury yield just hit 5.2%, the highest in 15 years, forcing interest on national debt to soar. The federal government is now spending over $600 billion annually just on interest. That crowding out effect sucks money away from schools, infrastructure, and pandemic recovery funds. Every 1% hike in rate translates to $60 billion more in annual interest. That's like cutting 6 major percentage points out of the defense budget. Meanwhile, everyday Americans will face higher mortgage rates, more expensive auto leases, and ballooning student loan bills. China's $1 trillion strategic exit. China has offloaded U.S. corporate bonds, treasuries, and even large swaths of stock market holdings, all in stealth mode. That's $1 trillion wiped from America's balance sheet. Simultaneously, the Shanghai Stock Exchange is up 12%, while Wall Street is bleeding red. Why now? Analysts link this to U.S. tech export restrictions, heightened military posturing in Taiwan, and mounting tariffs on Chinese EVs. Beijing's move isn't panic, it's precision. BRICS goes local, dollar loses grip. BRICS nations are ditching the dollar. They're negotiating trades in rubles, yuan, rupees, and reais. With 40% of global GDP tied to BRICS, a 1% drop in dollar dominance could shave hundreds off your holiday budget and add $2 to $3 to the price of your morning coffee. Gold sales are surging too. Turkey, India, and Russia have increased gold purchases by 30% this quarter, a hedge against dollar risk. This isn't Wall Street drama. It's your grocery bill, your rent, your car payment. Electronics are now 10 to 15% more expensive. A $3 cup of coffee could climb to $3.50. Car payments may rise to $100 a month. Grocery inflation, still stuck near 7%. Even airline tickets, plus 12% year over year. Jobs are at risk too. Sectors heavily reliant on exports, like autos and agriculture, are shedding thousands of positions. American soybean farmers could lose 20 to 30% of export value if trade routes shift. The investment exodus and digital gold surge. Investors are pulling out of U.S. assets, foreign capital is vanishing, with a net outflow of $200 billion just last month. As a result, Bitcoin surged past $85,000 and gold is inching toward $1,600 per ounce as investors look for safe havens outside the dollar zone. What's next? Key indicators to watch. Foreign reserve moves. If Japan or Saudi Arabia start following China, it's game over. Bond auction performance. Weak demand at auctions equals red alert. FX market volatility. Watch USD declines versus yuan and rupee. Even a 3% drop here can cascade. Geopolitical flashpoints. Any Taiwan conflict, South China Sea move, or Korea escalation could act as trigger points. Final take. The U.S. dilemma. Are we hurtling toward a new financial era? One where the dollar slides, bonds crumble, and power shifts east. One thing's clear. This isn't a drill.